You have exactly 35 days, 15 hours, 44 minutes, and 44 seconds to do your taxes. That's the bad news. The good, who's counting, right? The good news is it was leap year, so you had one extra day of procrastination. We have Douglas Hord here, the owner of My Tax Guy in Houston. You are taking a look. Good morning. So as we talk about money and taxes, everybody's favorite topic, give us a way that we can get a little more money back this time. You say there's some things we might be overlooking.
Sure. People who self-prepare especially have a tendency to overlook a couple of things. The first thing that everyone seems to overlook is that here in Texas, of course, we don't have state income tax, but we can deduct our sales tax. If we're itemizing our deductions, the IRS has a calculation chart that will, based on your income, calculate what your sales tax deduction is. If you bought a car or another big purchase, you can add that sales tax to that deduction and increase your sales tax deduction on your itemized deductions.
Okay, so let me just ask a clarifying question there then. So the IRS has a number, right, that would be the standard sales tax estimate.
Right.
And then if we bought a car, we can add that sales tax on top of the suggestion. Ooh, okay. Yep. Okay, so that's good. That's the savings that we might not be taking into account here.
That's true.
But you also have some more suggestions.
Yes. So when the Tax Cuts and Job Act went into effect, mortgage insurance and school tuition deductions were eliminated. Those were restored retroactively. And so people who were thinking that maybe those deductions no longer existed, they can still take them. Those exist in the tax software and you just have to dig them out and put them in.
So the mortgage insurance, that's in addition to the mortgage interest as well?
So people who have FHA loans and VA loans and some other loan products pay a mortgage insurance premium policy on top of the interest, and that's partially deductible.
Okay, so already you're thinking I might be getting a little money back, right? Or have to pay less.
I have to pay less.
Have to pay a little bit less.
Right.
So we do want to talk about, since this is for 2019, right? There's nothing we can do to go back.
Right.
But do you have some suggestions of things we can do now when we're looking ahead to next year?
Oh, absolutely.
Okay.
So if your employer offers a health savings account, you need to make sure that you maximize your contribution to that. It becomes pre-tax money, meaning you don't pay tax on it. And then as you go through the course of the year and you have deductibles, copays, prescription costs, you pay for those with your HSA balance, which means you're not paying income tax on those healthcare costs.
Okay.
That's a big savings. And then if you have a 401k or 403b through your employer, you want to max out your contribution to the degree that you can within your household budget, because all that becomes pre-tax money and you reduce your tax burden. In many cases, that drops you into a lower tax bracket.
Okay, so we did have that big change in 2017, kind of the overhaul. So do you suggest that we still kind of stick to doing it ourselves, or we should call someone to help us out a little bit?
I love TurboTax because a lot of people who've done their returns on TurboTax end up calling me anyway.
Oh, okay, there you go.
You know.
And there is one last question. IRS, they do offer to do your taxes for you if you make under a certain amount. Isn't that right?
That's true.
Okay.
They will.
All right.
You have to make an appointment to go in and do it. Yeah, it's challenging to even get them on the phone.
Okay.
And you have to get them on the phone to make an appointment to do that.
All right. Okay.